conference together. I told him earlier today that the measure of any good conference is whether or not people show to the next one, and I think at this point I'll definitely be coming to the next one and hope to see all of you there as well. It's far exceeded everything I thought it could be, and I say that as a sponsor. My name is Ridgely. I'm the CEO and founder of Stand, Stand.trade. We're a prediction market aggregator, very apropos of mixed last presentation, so we'll talk a little bit about that. But what I'm going to talk to you about today is automating prediction markets. Just for context, Stand has been building the space for over 2 years now. We actually launched our own prediction market exchange. I was very disappointed that it wasn't in mixed presentations, but you know, that happens. And we actually pivoted, and we came to the realization that a lot of the prediction market traders needed better tooling and started to go down that path, and that's what caused us to launch Stand in August of last year. So in terms of automating prediction markets, you're probably wondering, why am I qualified to talk about this? Well, we've done over 100 million in trading volume in under 6 months, so we kind of know what we're talking about. We do over 1 million in trading volume per day. We work with both Polymarket and Kalshi. Both Polymarket and Kalshi asked us to be a part of their builders program. If you go to the top lifetime builders program, you will see Stand there. You'll also see two other companies that focus on automating kind of trades and what that looks like. And in my mind, this is where I think I see the future of prediction markets going, because it follows a lot of different parallels that we see in other categories of finance. Just real quickly, on this particular screen, you can see our pegged orders. This is actually one of the first automations that we launched. Pegged orders are kind of like a moving limit order, so you basically set two ends of kind of the spread, and it's really useful if you're farming rewards or if you're a bond trader and you're trying to get at a certain price. And this was a really popular tool that, I guess, our automation that we launched. Just for context, when we launched in August, we did $3,000 of trading volume for the entire month. Then in September, we did $67,000 of trading volume for the month. And then in October, we did 4.2 million. So, and that was a direct result of the automation that we launched, including a couple others. But before we get into that, I think, like I said, let's talk about kind of the parallels that we see. So if you think about the history of public equities, 1920s, you have the Wall Street trader, you have the frenzy that's going on as people are buying radio stocks, they're buying railroad stocks. This is pre-SEC, and it kind of leads to a huge crash, which we've all heard about, and a lot of disdain towards stocks. And it takes about 20 to 30 years before stocks really start to pick up momentum again in terms of what that looks like. If you fast forward to the 1980s, that's when RenTech and a lot of funds start to recruit kind of academics, so you start to see physicists, mathematicians come into the fray, start to build out models. It takes a little bit of time. I think it took RenTech like 11 years before they were profitable, but it does start to happen. That shifts in the 1990s as you start to see quant funds emerge, so programmers become like the hot commodity in terms of how people view stocks. And then in the 2000s, it moves into hardware as people start to lay down like fiber optic cables, high-frequency trading firms that we're all familiar with, just try and win the edge for like milliseconds of trading. And the reason I point this out, which I'm sure many of you are aware, is because I think we're in that phase of like the 1920s with prediction market traders, where right now people are doing a fair amount of the trading, but that's slowly going to shift. You're going to see more automations, you're going to see more agents. You probably heard Dan's presentation, you heard Samya's presentation in terms of how they're thinking about that. And I don't have to tell people in this room kind of what the trajectory of prediction market looks like. I think Gina did a great job of that earlier. But this is a graph that I think most of you may not be familiar with. So this is actually looking at Open Router with the number of tokens that are consumed on a weekly basis across different models. And if you rewind to last year, we were, as a society, consuming about 1.7 billion tokens. That is 15x to the point that we are now consuming about 27 billion tokens every week. And that's across the various models in terms of what you see and how people are thinking about it. And I don't think that's going to slow down. I think like there's basically going to be more and more consumption until we start to hit real energy limits. And the reason I think this is important for prediction markets, and hopefully you guys have seen this photo before, it's the president of YC, Gary Tan, talking about CloudBot and OpenClaw. And if you rewind back to February, when there was the whole CloudBot craze and everything going on, what was really interesting in my mind was that what I saw a lot of people, both on Twitter and people reaching out to me, very public CEOs, and I'm not going to drop their names, but like they were all asking kind of like what the APIs were that they could use so they could spin up their agents. They knew what Stand was, they knew how automations worked, all that good stuff. And you saw kind of this like barrage of people who claim they cracked Polymarket, right, or Kalshi in terms of like the CloudBot or OpenClaws that they'd set up. I'm very skeptical. I tried to set up one myself, did not work. But I do think it's indicative of a larger trend that I saw across the board, which is interesting, which is people, for whatever reason, started to work more towards Polymarket and Kalshi than the public equities market. And if you actually start to think about why that is, it's very similar to kind of when ChatGPT first launched and everyone wanted them to make them a millionaire in like 30 days, you know, kind of no mistakes, all that good stuff. But there were actually like environmental reasons, I think, for why people went after Polymarket and Kalshi. So the first is, I think there's a perceived fairness. I think so many people, if you look at the meme stock craze and everything and how people perceive like Occupy Wall Street, there's this perception that like the public markets, particularly stocks, are no longer fair. And I don't think prediction markets right now have that like misperception or that kind of like frustration that is directed. In fact, actually an hour ago, I don't know if you guys saw, but Polymarket announced that they caught the insider for the Venezuela strikes. So that's a fun little factoid and very apropos during a prediction market conference. But going back to kind of why I think people were using OpenClaw for prediction markets, I think it's that perception of fairness. I think it's the fact that if you look at like Polymarket, it's built on chain, you can see who your counterparties are. It's very indicative of kind of like this transparency and this like equitable environment that you can actually make money on. You get to leverage your domain expertise. The technical bona fides are there with an API-first environment, very automation-friendly. Markets are open 24/7. And I think the last and most important reason, which is more or less the case in all of humanity, is we're lazy, right? Like, we just want someone to do it for us. And hopefully this reference doesn't get lost by you guys. Can I see a show of hands? Are there Rick and Morty fans in the room? Awesome. It worked. Okay, so in this particular episode, Rick and Morty, they have to fix the car battery. And Rick has actually created a microverse where it's actually powering his car, right? Like, and this is the image that I always think of when people are talking about prediction market agents or prediction market trading and like automations in some capacity. It's the whole idea that, no, they work for me, but they like earn revenue for themselves, and like there's all these steps that are involved, and it gets very complicated very quickly. But the general precipice, you don't want to do it yourself. So you just try and figure out a solution that will automate the strategy entirely for you. And again, like when we did this at Stand, like we started to roll out more and more automations, we were actually really hesitant to roll out copy trade. We were not the first product to roll out copy trade and did not do so because one, most of our audience was whales and pro-tail traders. But two, we didn't think the game theory dynamics really made sense. And eventually enough whales complained and bitched and moaned to us that we did roll it out. And as soon as we did, our trading volume tripled again, right? Like it was one of those things where like the trade automations is like just this idea that people want kind of the ease and the access of tools to do it for you. And so you can see what the copy trade dashboard on Stand looks like. You have a nice overlay of your P&L. You can see kind of the trader, who you're following, what their trades are, the copy trades, all that good stuff. When we launched it, we tried to make it a little bit more intricate because we didn't want to get traders wrecked on blind copy trading individual traders. We thought that was a bad idea. Still think it have some misgivings around it, but it's very popular. So Doom published an article last week, hopefully some of you guys saw it, where they did a breakdown of bots and automations in Polymarket's ecosystem, and they were looking specifically at the crypto markets. And what they found, which was really interesting, and just for clarification, they were designating bots here based on the trading frequency, the time of day, patterns, all things of this nature. It's pretty easy to spot. But they basically came up with like the supposition that like once Polymarket launched the 15 minutes and the 5 minutes, the bot activity kind of shifted downstream to the point that now in the 5-minute markets, bots account for 55% of the trading volume happening in prediction markets, which is kind of crazy. Binance published a separate report where they said it's around 37% of the entire ecosystem. I don't know what the exact figures on Kalshi are, but I imagine they'd be somewhat similar just in terms of what you see. But it is interesting, I think, in the grand scheme of things that you see this like wave of people trying to, again, like have these overall market-making strategies or these reward strategies or these trading strategies that are just automated across the board. So I'm guessing most people in this room know what this chart is. Does anyone know what it is? You can speak. This is interactive. No one. Yeah, exactly right. So it's the flash crash of 2010. So for those of you who don't know, and there's a really good book that you guys should read called The History of the United States in 5 Economic Crashes. They talk about this, the last crash that happens in 2010. It's emblematic of like high frequency trading in the stock markets in terms of what that looks like. But basically in 36-minute period, the Dow Jones lost 1,000 points. It was like the second biggest drop, in like history. And it happened because there was this trader in London of all places who was spoofing sell orders that basically got triggered by the bots. And then he was trying to buy them at lower prices as a result. And the reason that I bring this up is that while we're starting to automate prediction markets, while we're starting to kind of get into this foray, there are real risks involved with kind of taking users out of the equation and kind of creating this ecosystem where we've seen firsthand what happens when traders find like the edges in the rules when they start to mess with UMA. It'll happen with bots too. It's just a matter of time, and I think it's better to call it out right now and be aware of it than it is to sit on our hands idly and kind of wish it away. So this is a prediction market conference, and I thought it would be fun just to make a couple bold predictions because I think a lot about the space just overall in terms of where it's going. The first thing I think is very representative of obviously this presentation, but just the ecosystem as a whole. I think by 2027, 75% of the trading is going to be automated. I think it's going to be done with bots and strategies and things of that nature, and it's going to be it's going to become less manual. And the best parallel, again, is if you go to crypto, it's 80%. It happened in a very short period of time, and prediction markets are already outpacing crypto markets and public markets in terms of how they're growing exponentially, mainly as a function of sports. But the other thing, and I'm really mad that Flip kind of beat me to the punch here because he had a really good presentation where he threw the $1 trillion number, and I was a little more cautious. I think that daily trading volume is going to reach 10 billion. And when I say daily, I mean both exchanges, Polymarket, Kalshi. I think they're both going to hit 10 billion. So for context, on a weekly cadence right now, Kalshi's doing about 4 billion. Polymarket's doing 2 to 3 billion, kind of give or take. So I think in the next couple of years, you'll see that kind of shift again, and you'll see that growth. And I'm a firm believer, like I've been saying this for 6 months now, especially once Polymarket raised, I think at like 11 billion, that I think both Polymarket and Kalshi have the runway to become $1 trillion companies. Whether or not they will, it's a question of execution, a question of environment, question of kind of perception of the actual individual traders. But there's a lot of things that have to happen that are still happening for this to go right. And obviously it's contingent on the regulatory environment and contingent on more liquidity being introduced into the space. So that's my presentation. I'm happy to answer any questions right now. Hold on one second, he's going to give you the...
You mentioned liquidity is one of the things that need to happen to get your predictions. How do we do that?
Yeah, I mean, you've heard the chicken and egg expression dropped a couple times today, and I'm going to be the third or fourth person to do so. I do think ultimately it has to come from institutions. And I was at the Kalshi conference a couple weeks back, and I watched the head of equities at Goldman say very plainly, like the number one concern for Goldman entering prediction markets is actually liquidity. He needs the guarantee that the liquidity when he enters a market is also going to be there when he exits the market. Very interesting that he didn't say anything about regulatory, but we'll sidestep that. And I think like just if you look at it from that lens, that's probably where liquidity is going to come. It will continue to come from retail and kind of the expansion of different categories and maybe some smaller shops, but ultimately you need Wall Street, you need London, you need kind of the larger financial institutions around the world to start to participate, and that's where the liquidity will come from.
Deal with the authorities to try and... Sorry. I seem to remember he did a deal with the authorities upon extradition where he went to work for some players at Wall Street to try and explain his methodology and the spoofing he was doing, I think, at the time. Do you remember, I'm just curious, Steve, what happened to him in the end?
I don't know what happened to him. I do recall, I think he took a deal as well, and like it was basically to kind of showcase what he'd done, because it was kind of awing that this person, like I think it was a West London suburb, just managed to pull it off.
He was in a northwestern suburb trading from his parents' house from his bedroom.
Yeah, and managed to crash the market like in a span of 30 seconds, which is crazy. So, yeah, I don't know the full details, but again, I recommend that book. It's a fantastic read if you ever get the time.
Excellent book.
Yeah. Any other questions? Okay, cool. Thank you, everyone.